Welcome back to Doc Tickers, the show where we break down these complex earnings calls and try to make them digestible and insightful and maybe even a little bit fun. Today we are diving into the world of Northwest Natural Holding Company, a company that's actually celebrating 166 years of business.
That's right.
From gas lights to modern energy solutions, this company has seen it all. And their latest earnings call, well, it gives us a glimpse into their strategy for continued growth.
Yeah, it's quite a story. They started as a single utility, and they've evolved into like a 4-business powerhouse.
And this latest earnings call, let's just say they're not resting on their laurels. Definitely not.
Yeah.
So for listeners who maybe haven't had a chance to parse through the entire call, let's start with the headline numbers. Northwest Natural reported adjusted earnings of $2.33 per share for Q4 2024. Now that's slightly down from the previous year. But here's the interesting part. They're projecting earnings between $2.75 and $2.95 per share for 2025. That signals some pretty strong confidence, right?
Yeah.
It does. And to understand that confidence, we need to dig a little deeper. That slight dip in Q4 earnings is largely due to what's called regulatory lag. Essentially, it takes time for utility companies to adjust their rates to reflect their investments in infrastructure and operations. Think of it like a bit of a delay in getting reimbursed for the work they've done to keep the lights on, so to speak.
So it's not necessarily a sign of weakness,
Right.
but rather a timing issue.
Exactly. And that's why their 2025 guidance is so important. They've already secured new rates in Oregon, which went into effect on November 1st. That means they're catching up on those costs and setting the stage for a stronger 2025.
Speaking of Oregon, there was a pretty significant win for Northwest Natural in their latest rate case there.
Yeah. A $93.3 million revenue increase. It was the largest rate case in the company's history, and it gives them more financial breathing room to invest in their infrastructure.
So when you say invest in their infrastructure, what exactly are we talking about?
Well, think about everything that goes into keeping the gas flowing safely and reliably, upgrading aging pipelines, modernizing their systems, even investing in new technologies. These investments are essential for maintaining a robust and safe system, especially as they grow.
And that growth seems to be coming from multiple angles. We've got the Oregon rate case, but then there's also this major acquisition they completed, Sea Energy in Texas. It's a completely different market with, I imagine, a whole different set of opportunities and challenges.
Absolutely. Sea Energy operates in a region of Texas experiencing rapid population and economic growth. And guess what? People moving into new homes need energy. That's where Sea Energy comes in.
So they're essentially riding the wave of a booming housing market.
You could say that. They've seen a 22% compound annual growth rate in customers from 2021 to 2024. That's phenomenal growth. And it's not just about new customers either. They've got a massive backlog of nearly 190,000 connections waiting to be completed. That tells you there's a lot of pent-up demand.
Wow, 190,000 connections. That's like a small city's worth of new customers.
It is. And all of this translates into financial benefits for Northwest Natural. They're projecting Sea Energy to add between 35 cents and $0.30 to their earnings per share in 2025. That's a significant boost.
But wait, there's more. We can't forget about their water and wastewater utility business, which seems to be quietly growing like a well-watered garden.
It is. They reported 4.6% customer growth in that segment last year, which is impressive in its own right.
I'm curious, what's driving that growth? New housing developments, expanding service areas, something else entirely?
It's actually a combination of factors. They're seeing organic growth within their existing service areas, meaning people are moving into those communities and needing water service, but they're also strategically acquiring smaller water utilities to expand their footprint. It's a smart, two-pronged approach to growth.
It sounds like they're really firing on all cylinders.
Yeah.
But all of this growth requires significant investment rights, new pipelines, treatment plants.
You're absolutely right. Growth requires capital, and Northwest Natural has significantly increased its capital expenditure guidance for 2025 to between $450 and $500 million. That's a big jump, and it shows their commitment to building for the future.
Okay, so let's talk dollars and cents. How are they planning to fund all of this while maintaining a healthy balance sheet? Because that's a question on every investor's mind, right?
For sure. They're anticipating needing a relatively modest amount of equity financing in 2025, between $65 and $75 million. They've also got plans to issue what are called junior subordinated notes. Now, without getting too deep into the weeds of financial jargon, these notes basically help them refinance a loan they took out to acquire Sea Energy.
So they're strategically managing their debt to keep things under control.
Precisely. And here's the really encouraging part. Their core operations generate strong cash flow. That gives them the financial flexibility to fund these growth initiatives without overextending themselves.
That's good news for investors who are looking for stability and growth potential. But let's zoom out a bit and talk about the long-term outlook. Northwest Natural seems to be betting big on both natural gas and water utilities. What are your thoughts on their strategy?
I think it's a smart play, especially in a world that's increasingly focused on diversifying energy sources and ensuring reliable access to essential resources like water. They've bumped up their rate-based growth target to between 6% and 8% annually. That's a pretty healthy clip, and it reflects their confidence in both their gas and water businesses.
You mentioned diversification, and it seems like that's a key theme here. They're not putting all their eggs in one basket.
Not at all.
Yeah.
And their customer growth projections tell a similar story. They're anticipating overall customer growth of 2% to 2.5% annually. Now, a good chunk of that is driven by Sea Energy, which we've already talked about. But here's the thing. Their projections for water utility growth don't even factor in potential tuck-in acquisitions.
Hold on, tuck-in acquisitions. What does that mean?
It basically means they're open to acquiring smaller water utilities that fit strategically within their existing operations. Think of it like adding puzzle pieces to create a larger, more complete picture.
Ah, I see. So there's potential for even more growth in the water segment than what's currently reflected in their projections.
That's the implication. And it makes sense given the fragmented nature of the water utility industry. There are lots of smaller players out there that could be attractive targets for a company like Northwest Natural.
So let's circle back to Sea Energy for a moment. What's the long-term game plan for that acquisition? Is it just about riding the Texas growth wave? Or is there more to it?
There's definitely more to it. They're projecting some seriously impressive numbers for Sea Energy over the next few years. 20% to 25% rate-based growth from 2025 to 2027. And a compounded annual growth rate of 32% to 37% for net income during that same period.
Those are eye-popping numbers.
Yeah.
What's driving that kind of growth? Is it purely population growth, or are there other factors at play?
It's a combination of things. Yes, population growth is a major driver, but they're also pursuing regulatory recovery, which essentially means they're working with regulators to ensure they can earn a fair return on their investments. And they're exploring ways to leverage supportive mechanisms, like the Gas Reliability Infrastructure Program, or GRIP in Texas. This program encourages investments in natural gas infrastructure to improve reliability and resilience, especially in the wake of recent extreme weather events.
Ah, that makes sense. So they're not just relying on market forces. They're actively working within the regulatory framework to create a favorable environment for growth.
Exactly. And that's a key takeaway here. Northwest Natural isn't just passively writing trends, they're actively shaping their future through strategic acquisitions, regulatory engagement, and smart investments.
I'm sensing a but coming. There have to be some risks or challenges, right?
Of course, no investment is without risk. The biggest one for Northwest Natural, at least in my opinion, is execution. Can they successfully integrate Sea Energy and achieve those ambitious growth targets?
Right. It's one thing to project growth, but it's another thing to actually deliver it. And then there's the broader energy landscape, which is in constant flux. Who knows what the future holds for natural gas as renewable energy sources become more prevalent?
Those are all valid points. The energy transition is a wild card, and it's something investors need to keep a close eye on. And then you have the regulatory environment, which can be unpredictable.
Speaking of unpredictable, are you ready for a little speculative fun?
Always. Hit me with it.
All right, let's put on our "this is not financial advice" hats and brainstorm some outrageous but potentially brilliant trade ideas based on what we've learned about Northwest Natural.
I love it. Game on.
Okay, how about this? We know Northwest Natural is bullish on natural gas, even as the world shifts towards renewable energy. So what if we play the contrarian angle? We short a basket of renewable energy stocks and go long Northwest Natural. Essentially, we're betting that natural gas will hold its own for longer than the market expects.
That's a bold move. But I see where you're going with this. It's playing on the potential for natural gas to remain a key transition fuel as the world moves away from coal and towards a cleaner energy mix.
Exactly. It's a high-risk, high-reward trade. But hey, isn't that what this segment is all about?
It is. And honestly, it's not as outlandish as it might sound at first. Natural gas does have a role to play in the energy transition, and Northwest Natural is well positioned to capitalize on that.
But let's play devil's advocate for a moment. What are the potential pitfalls of this trade idea? What could go wrong?
Well, for starters, the renewable energy sector is growing rapidly, and government policies are increasingly favoring clean energy sources. So betting against that trend could be risky.
Right. It's always dangerous to underestimate the power of government incentives and technological advancements. What else?
Another risk is that natural gas prices could become more volatile, especially if we see geopolitical tensions or disruptions in supply chains. That could make it harder for Northwest Natural to maintain its profitability.
And of course, there's always the execution risk. Even if the macro environment is favorable, Northwest Natural still needs to deliver on its growth plans and navigate the complexities of the Texas market.
Absolutely. No investment is a sure thing, and this trade idea certainly has its share of risks. But hey, that's what makes the market interesting, right? It's all about weighing the potential rewards against the inherent risks.
Well said. So listeners, we've covered a lot of ground today. We've explored Northwest Natural's latest earnings report, dug into their growth strategy, and even brainstormed a wild trade idea. But now I want to hear from you. What stood out to you from this deep dive? What questions are still lingering in your mind?
Yeah, I'm curious to know what our listeners think about Northwest Natural's bet on both natural gas and water utilities. Do they see it as a smart diversification strategy? Or are they concerned about the long-term prospects of natural gas? In a world that's increasingly focused on renewable energy?
Great question. And what about that trade idea? Are you feeling bold enough to bet against the renewable energy trend? Or are you taking a more cautious approach? Hit us up on social media and let us know your thoughts. We love hearing from our listeners.
We do. Your insights and perspectives are always valuable. And remember, this is just the beginning of the conversation. There's always more to learn, more to analyze, and more to debate when it comes to the world of investing.
Couldn't agree more. So keep those brains buzzing, keep those calculators clicking, and most importantly, keep those curiosity fires burning. We'll be back soon with another deep dive into the world of earnings calls.
Until then, happy investing, everyone. And remember, this is not financial advice. Always do your own research and make informed decisions that align with your individual investment goals and risk tolerance.